in terms of the overall pool, even as it expands.
That's KFin Technologies for you. Mayuresh Joshi or William O'Neill is with us on the show now. Mayuresh, afternoon. What explains this last hour surge in Reliance Industries? Have you heard anything and your thoughts?
Afternoon, Rima. Not that I've heard anything, but two, three things probably happening in favor for the behemoth. One, in terms of the windfall taxes coming off, I think it did not anyway significantly impact it out of the Jamnagar plant as well. But I think that's a sentimental positive as well. The second element that we are probably looking and tracking is the GRM prices itself. And GRMs have definitely inched higher from the lows that they hit a few months ago. So with increased refining margins expected to come through quite significantly in the quarter and the quarter after that, I think earnings growth should start picking up on this leg or this segment of their overall consolidated earnings. When it comes to Jio and retail, Rima, I think the numbers that you're probably seeing in terms of subscriber additions, I was seeing your bites on that. Significant additions happening at the expense of Vodafone Idea. But ARPUs have also shown an upward trajectory and will keep on doing so, which basically means with a very low leverage balance sheet on Jio, the exponential cash flows can be strong. On the retail front itself, the expectations in terms of improvement in margins, pouring into FMCG as well with their own independent brands, I think there is a huge addressable market size out there as well. So I think all the three components that Reliance basically operates out of is probably moving in the right direction. Q3 numbers should be relatively better, and so should Q4. So I think the Street is probably taking positive cues on positive expected earnings growth in the next few quarters.
Hi, Mayuresh. Good afternoon. Are you traveling for the vacations? Are you going to any airports or are you flying somewhere?
No, so I'm not flying, but I stay very close to the airports. So I can see the buzz around here.
So, okay, so let's talk about a couple of those stocks then. You have GMR Airports. Well, that's up close to 3.5% in trade. Interglobe Aviation as well is doing pretty well, up 3.5%. So those are relatively outperforming what some of the other mid-cap stocks are doing. Any view on any of these two names at these prices?
So afternoon, Nigel, in the first place, I think travel is booming. So I think what you've been seeing in the past couple of quarters since the unlock trade has begun in real earnest, hotel bookings have been through the roof in the past few quarters. This quarter probably gone best quarters for the hotel industry as a whole. So I think if you need to go to hotels at different destinations, you definitely need to travel. So I think the buzz at the airports that you're probably seeing for domestic and international travel as well, the expectations in terms of crude prices coming off, I think ATFs are a significant component of aviation companies as well. And as they start coming off, the relative EBITDA will be seemingly better as well. So yes, I think there is a sentimental trade attached to these companies as well. But have a look, in our opinion, on our buy watch list at VIP Industries. Because if you need to travel, you need to carry luggage as well. The company has obviously seen the brunt in terms of input cost inflation in the previous two quarters. The best part about their input cost is 65 to 70% is related to crude and crude derivatives. With prices coming off significantly, Nigel, on this front, the expectations in terms of margin expansion Q3 onward seems to be substantial. Both hard luggage as well as backpacks seems to be making a huge comeback. The finished goods from China, the dependency thereof is less than 10% at this point of time. The earnings growth and specifically the gross margin performance because of these factors expected to improve. Cash-rich balance sheet, which basically means that the incremental operating leverage plays very, very effectively in terms of ROEs and ROCEs. So yes, I think with the aviation companies and the airports, sentimental trade attached, but something more structural in terms of earnings growth. VIP Industries, on the RS rating on the O'Neill lens, it's a little bit weak at this point of time. So I think conditionally, if it crosses 350, 360 odd, where there's a lot of supply, my own sense is that there can be strong momentum on this.
You know, I was talking about the two insurers, right? GIC, and New India. Check out LIC as well. That is the other one which is jumping 6.5%, 7%. So this is the, I don't know what to call it, rally of the underperforming PSU insurance names because all three are jumping as we speak. LIC up 6, 7% and the other two much more. Mayuresh, any thoughts on this pack?
Prashant, no, I think it's more a sense in terms of the beaten down valuations and beaten down price strength that these stocks had exhibited. Now, a lot of the PSU stocks had shown significant momentum and traction, PSU banks specifically. So I think the catch-up trade of sorts, specifically on the non-life players, because they're showing significant traction happening at this point of time. Not really sure whether the street is sensing any sense in terms of regulatory tweaks, whether there is further capital infusion coming in from the government at this point of time, or any change in the rules thereof. But largely, I think it's more a sectoral churn that is probably happening at this point of time on the other public sector enterprises, which have probably not performed.
You were talking about VIP and how that's looking attractive to you given the current dynamics. What about Safari? That's also, it's a similar play compared to VIP. Do you like it? What's the big difference between VIP as well as Safari?
I think not much to distinguish, very frankly. I think if you look at the luggage industry, DEMA itself, Safari, VIP, and Samsonite, obviously it's not a listed player in India, but I think they've got a major lion's share when it comes to the organized luggage or the handbag market in India itself. Now, the unorganized market is pretty large even at this point of time. So I think all these three players have substantial scope with the capacities that they have got at this point of time to probably utilize it to the fullest and probably garner a lot from the unorganized market itself. Obviously, I think the tailwinds that follow for all these companies with lower crude coming through, input cost basically going down significantly, and demand expected to persist, acts as strong tailwinds. One more factor to be added, Rima, surprisingly within the space itself, is around 32 lakh weddings are expected. A major source of their sales also comes through in terms of storage of luggage when it comes to household items as well. So I think that's one major source when luggage and the marriage season probably provides that as well. The only difference that I see for Safari is probably low liquidity at this point of time, which probably has a lot of beta component in terms of price point. Valuation-wise, not much to distinguish again, but I think VIP relatively stands out to be a more safer play, both in terms of market leadership, in terms of the institution holding, and probably satisfying a lot of parameters on the own lens.
And yes, Safari is up 92%, while VIP has gained 26-27%. So Safari has actually outperformed VIP. Do stay on, Mayuresh. We need to slip into a very short break. We'll come back and get you the market closing comments as well and some more market talk.